Alrighty, traders. John Howell here. Let's actually have just a bit of a market update. The Dow Jones, the S&P, and the Nasdaq, they're on actually a little bit of a shaky grounds right now as I speak, and I want to share that with you, what I'm seeing there right now as it's happening, and a bit of an update on the mining stocks and also silver and gold. Let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty guys, so let's get straight into what I'm seeing right now when it comes to these markets here. First, let's actually start off with the Dow Jones. Look what happened with the Dow Jones today. Really interesting. If I zoom right in, you can see like what do they call it, a pin bar or shooting star, whatever you want to call it, a candlestick. You can see it actually opened, came all the way up, came all the way down, and closed lower. It's actually quite a bearish candle. So I wouldn't be too surprised, guys, if we actually got a bit of a follow through on the downside tomorrow. Coming with that. Now, I used to trade these a lot, and how I used to trade it was this. See how I used to trade these from the bullish side and also the bearish side. So what I mean by that is you can see how it actually closed lower there. So I would how I used to trade this was we'd have the big long candle and it came down and closed there. So the previous day's high, which was right there, I would put an order in to get filled at that there, and then my stop would be just above the high of today's bar. And so if I go to the hourly charts, or even, down to the hourly charts, you'll be able to see that, let's see if we can go to 15-minute chart, that may do a lot better. So that was, okay, so that was yesterday. So the way that I used to trade these a lot is I used to put an order in, so if the market rallied up towards, say, the 33,000, I'd get short. I'd have a stop just above the high here, and then I'd look for a continuation on the downside. So it's really interesting to see we're getting that sort of formation there, and it'll be really interesting to see what happens tomorrow. So that we could see that through on the Dow Jones. On the S&P 500, the S&P 500 actually had a bit of a down move. I don't expect this thing to whole crash here, guys. But possibly looking at the Dow Jones and looking at the S&P, we're quite possibly going to have a bit more of a pullback out of this here. But I don't expect this to be a whole crash. But the markets are on shaky ground right now, and you can see, and I do expect to see a bit more of a downward movement out of these, and a bit more of a pullback. And but it's going to be really interesting. Now the big picture out of this, guys, is that the line in the sand is this low through here. So between the sort of the 3,800 and then 3,700, this whole low through here was sort of the line in the sand. And what I mean by the line in the sand is that if we break below that, then this upward trend is now game over. And then if we're going to see some sort of a big crash, meaning like this whole movement on the downside, and I just open up my charts, you can see there, right? So if I'm looking at my 3 minutes or the last 3 months, you can see here where we're at here right now. But if we start breaking below 3,700, that's when we could quite possibly start to see something more worse happening. Now, I don't expect to see that, but it's, again, anything can happen. But if I open up my charts, you can see if we start to break below this 3,700, this is going to be one bit of a topping pattern, and then we're probably going to start to make our way down. Again, guys, I'm not calling that, but it does look like we're getting a bit of a weakness on the short term. So weakness is actually starting to come in with that. And also, if you look at the Nasdaq here, which is actually quite interesting, the Nasdaq is actually starting to roll over into a bit of a downward trend. So we could actually start to see, or to continue to see, a bit more weakness coming in, even in the tech stocks. For some reason, guys, the tech stocks got hammered today. So you can see that by looking at my charts and by looking at the last sort of, say, 6 months, I was actually just doing this with some of my private clients. And by the way, guys, if you'd like to learn like chart reading, if you like to learn, this sort of stuff when it comes to foundations, chart reading strategies, trading systems, then go to johnsflashsale.com. You'll be able to grab the $7 trading course. It's actually $7 that I'm running a flash sale at johnsflashsale.com, or there should be a link in the description. We can see that I've been drawing some again, I was doing this for my private clients just actually today, and you can see here that what's happening is that this is where we started to change the tune. Because remember, in an upward trend, we have higher highs and higher lows. But if we have a low broken, it's not making high lows anymore, then that's actually a bit of a warning sign. So we had this low through here, and you can see we had this lower low through here. Now we could be forming a lower high. So this is actually a bit of a dangerous, a danger territory, a dangerous time for the Nasdaq, because if we continue down like this here, and we break below this level, then we'll probably like to see a pretty quick movement on the downside to 11,000. Now, again, we just have to wait and see that. There's other two scenarios that's going to happen here, and I'm more scenario number one, which is what I just said there. Or scenario number two is that we don't get a big pullback. It just holds. We continue up like that. It creates a higher low. Actually, let's actually do this here. Scenario number two is that the market actually holds here. We start to do something like that. This now creates a higher low here. And then we break past previous highs, and then we're probably likely to go for another move to the upside. So it's going to be really interesting, guys. Let me know what you think in the chat box below. Do you think scenario number one, where we continue to roll over? Or do you think scenario number two is where we hold here and we continue to rally up from there? Move over now through to silver and gold. Let's actually start off with gold. And gold has continued to be quite weak in the markets. We did have a bit of a rejection, because it's actually really strong rejection off my trend line there, which is quite interesting, as you can see. Very strong rejection. We are still in a very big downward movement here, so I wouldn't be too surprised to see a bit more of a continuation. It does look like by seeing the indices, and then also seeing, say, such gold here, and possibly even also silver, but not so much like silver, but also not as much as silver, but gold. It does look like that the markets actually want to have a bit of a short-term pullback out of here. So again, guys, I'm not calling for a complete meltdown, but it actually may turn into a meltdown. We just don't know. But for now, guys, it does look like this bit of a deflationary period is going to start to hit the markets, and that's the same for the mining stocks as well too, guys. We can see that the markets continue to make high, lower high, lower high, and lower high. So we're in a downward trend here. And it still hasn't changed. Looking at the GDX as well too, had a bit of a rally. So I wouldn't be too surprised if we actually did see a bit of a short-term drop out of this here. Same for all these SIL and the SILJ as well. So guys, all in all, the really interesting thing that I'm noticing here is the Nasdaq is the weakest one out of the whole lot, because that's already created a major lower low, and this actually could be a lower high. And if it is, and we continue moving over, then we could see a movement back down towards the 11 to 10,500 level. This actually could be a top. Now, I wouldn't want to be fighting that in this day and age. It's just basically what's happening, obviously, with the printing of money and so on and so forth. So I don't see massive pullback if we do start to see a pullback, guys. But it is dangerous territory. It is dangerous territory right now, and it does look like that we are likely to get a bit more of a pullback, but it's probably going to be short-lived overall. And same for the markets as well too. So that's what I'm seeing through there. Traders, it's something that I've been mentioning in my last few videos, and I want you to understand something, that when you're watching these market updates, I just did a market update for you. It doesn't mean I'm going to trade that, right? It doesn't mean, well, it looks like the market's going to drop, so I'm going to put a position on that. I don't do that, right? I have trade systems. If you want to be a professional trader, have a system that you get in. Just because the market looks like it's going to do something, or you think it's going to do something, you don't trade based on that. You trade based on a pattern, right? You trade based on systems. So please make sure you're doing that. If not, and please don't ever place a trade based on what you see in a video on YouTube. Like, are you serious? That's not how long-term success is done. I see so many, or actually I saw a few people in my comment section in the last few days saying that they saw a title of my video and then put a position on based on the title of the video without even understanding any of that. Are you serious? Don't do that. It's absolutely just crazy. You're going to completely blow yourself out of the water. Learn what it takes to be a good trader. Learn good trading systems, and for you to be a good trader as well too, right? Because You can have an amazing system that has a good win-loss ratio, but if you're not a good trader, then it's not going to work. And what does that simply mean? Most of you guys that are not doing well out of the markets right now, you're not sticking to a set of rules or a set of patterns that you believe in. You're just all over the place like a bumblebee. That's why I call you guys bumblebees, because you're all over the place. I don't ever trade just based on these market updates. I do these just to help you guys out, to give you guys a bit of updates and hopefully teach you a few things. But when I get into the markets, I get in because they're based on patterns that I believe in, that have a win-loss ratio and with good risk management. If you're not doing too well right now, I guarantee it's because you're just trying to get in and get out, get in and get out, get in and get out really, really quickly based on all this advice out there, instead of you getting into a system that has a good win-loss ratio and your good risk management every single time. So you guys can become amazing traders. You just need to be, the problem with most of you guys is that you don't have a system that you believe in, and there's no discipline there to actually following any system. And so therefore, of course, your results are going to be all over the place. When I first started trading, my mentor said, well, John, of course your results are all over the place. Of course you're winning and losing and losing and losing. And of course you don't have any consistency. You're all over the place in the way you're trading. There's no rhyme or reason. There's no consistency. There's no discipline to your trading. So anyway, guys, make sure you go to johnsflashstyle.com if you would actually like to get some help with your trading. I teach all this sort of stuff in that Flash Sale course. So go get that right now, guys, and I'll speak to you real soon.